Florida's sun-drenched housing boom drew in more than 330,000 new residents, doubled property prices, and fueled Governor Ron DeSantis' boasts of unstoppable prosperity. But beneath the celebration, a crisis was already taking shape. Insurance costs skyrocketed past $8,700 on average, stretching families thin and leaving tens of thousands on the brink of financial ruin. Now, with Hurricane Erin threatening to slam South Florida as a Category 4 storm, the governor scrambles, buyers back out, and experts warn the entire market could collapse overnight. How did Paradise unravel so quickly, and who stands to lose next? Between 2020 and 2022, Miami-Dade, Broward, and Palm Beach absorbed over 300,000 new residents, enough to fill a city the size of Pittsburgh. Miami-Dade alone processed more than 36,000 new driver's license exchanges in just the first half of 2023, with nearly 70% from abroad. By 2024, the county's population jumped another 64,000, second only to Maricopa, Arizona nationwide. The real engine was international migration, 123,000 new arrivals in a single year, the highest of any U.S. county. Broward gained nearly 57,000, Palm Beach over 32,000. On average, 83 people moved to Broward and 69 to Palm Beach every single day. These weren't just new residents, they were wealthy buyers. IRS migration tables show Miami-Dade's newcomers reported an average income of $114,000, nearly double the county's per capita figure. Palm Beach's inbound families reported six-figure incomes as well. New arrivals came from New York, Los Angeles, Chicago, Houston, and increasingly from Cuba, Colombia, Venezuela, and Haiti. Many arrived with cash, ready to bid aggressively. The result? Bidding wars became routine. Homes sold in days, often above asking, with contingencies waived. From Coral Gables to Delray Beach, prices doubled in just a few years. A Boca Raton home bought for $480,000 in 2020 resold for $975,000 in 2022. By 2023, the median home price across the Tri-County region hit nearly $600,000, up from $285,000 just 4 years earlier. Governor DeSantis touted the numbers as proof Florida had become the new promised land. But history carried a warning. In 1992, Hurricane Andrew leveled South Dade with 165-mile-per-hour winds, destroying 63,000 homes, damaging 124,000 more, and leaving 180,000 people homeless overnight. Insurance losses topped $27 billion, the most expensive disaster in U.S. history at the time. 7 insurers failed. Premiums spiked. Lawmakers rewrote the building code and forced stricter insurance standards. Those reforms held for a generation. But today, the system is again cracking. Florida homeowners now face the highest insurance costs in the nation. In Miami-Dade and Broward, $10,000 annual premiums are no longer unusual. Nearly 80% of U.S. insurance lawsuits are filed in Florida, draining billions from the system. Insurers exit the market, leaving the state-backed Citizens program holding 1.4 million policies, triple its size just 5 years ago. If a major storm empties Citizens reserves, every Florida homeowner could be hit with a hurricane tax surcharge of up to 45% on their annual premium. As Hurricane Erin looms offshore, insurers have already frozen new policies. Mortgage desks across South Florida grind to a halt. No insurance means no loans. No loans mean no closings. Overnight, the real estate engine that powered Florida's boom seizes up. The ripple effects reach far beyond Miami. Banks in Atlanta, Charlotte, and Houston tighten lending standards. Inventories swell as deals collapse. What began as a local storm threat now rattles housing markets across the Southeast. Florida's average premium has nearly tripled the national rate. Litigation drains billions. Insurers retreat. And one major landfall could push the system past the breaking point. The next storm won't just test Florida's homes, it will test its economy, its politics, and the promises that paradise was built to last. Florida's housing boom and brewing storm. For much of the last decade, Florida has been a magnet for growth. Sunshine, low taxes, and a pandemic-era migration wave pulled hundreds of thousands into the state, reshaping its housing market and economy. Yet beneath the glitter of record sales and soaring prices, a fragile foundation was forming, one that today collides with the realities of climate risk, runaway insurance costs, and the looming threat of catastrophe. The boom years. Between 2020 and 2022, South Florida experienced one of the fastest population surges in the nation. Miami-Dade, Broward, and Palm Beach counties absorbed over 300,000 new residents, enough to create a city the size of Pittsburgh. Miami-Dade alone processed more than 36,000 driver's license exchanges in the first half of 2023, nearly 70% from foreign nationals. By 2024, the county's population grew by another 64,000, ranking second in the nation only to Maricopa, Arizona. The real engine was international migration. In 2024, Miami-Dade gained nearly 124,000 residents from abroad, the highest figure of any U.S. county. Broward added 57,000, Palm Beach nearly 33,000. Every day, roughly 83 newcomers arrived in Broward and 69 in Palm Beach, more than replacing the domestic outflow of locals who left for cheaper states. These weren't just new residents, they were wealthy buyers. IRS migration tables show that Miami-Dade's inbound residents reported average incomes of $114,000, almost double the county's per capita figure. Palm Beach saw similar trends, with new households reporting six-figure incomes that far outpaced the local median. The pipeline was clear. New York, Los Angeles, Chicago, and Houston supplied steady inflows of professionals and retirees, while international arrivals surged from Cuba, Colombia, Venezuela, and Haiti. Miami-Dade processed more than 45,000 foreign driver's license swaps in just the first half of 2023, a 54% jump year-over-year. Armed with home equity, cash savings, and high salaries, these newcomers dramatically reshaped the housing market. Feeding frenzy. The influx transformed South Florida into one of the hottest housing markets in America. Bidding wars became the norm. Homes sold within days, often above asking, with inspection and appraisal contingencies waived. In Boca Raton, a three-bedroom home that sold for $480,000 in August 2020 fetched $975,000 by spring 2022. Palm Beach's median sale price jumped 20% in a single year. Even modest homes in Delray Beach drew offers $50,000 above asking, sometimes from buyers who had never stepped foot in Florida. By 2023, the median home price across Miami-Dade, Broward, and Palm Beach counties hit nearly $593,000, up from $285,000 just 4 years earlier. Properties vanished in days. Sellers set deadlines, agents fielded all-cash offers, and investors poured money into single-family and condo markets alike. The luxury segment soared as well. Miami Beach's median single-family price climbed to $4.5 million, up 16% in a single year, while Coral Gables pushed past $2 million. Condos, once considered the slow lane, sold at a pace not seen since the early 2000s. Governor Ron DeSantis proudly touted the boom as proof of Florida's resilience and attractiveness. To him, record migration and record prices were signs that Florida was the new promised land. But just as the market reached fever pitch, deeper cracks began to show. The insurance crunch. Florida's housing market has always existed under the shadow of hurricanes. In August 1992, Hurricane Andrew devastated South Dade County with winds of 165 miles per hour, destroying 63,000 homes and damaging 124,000 more. Insurance losses hit $27 billion, the most expensive natural disaster in U.S. history at the time. 7 insurers failed. Premiums soared. Lawmakers responded with a sweeping rewrite of the building code and stricter insurance standards, mandating hurricane straps, impact windows, and reinforced roofs. For years, those reforms held. But in recent years, the insurance system has buckled again. The average Florida homeowner now faces an annual insurance bill of $8,770, triple the national average and a 34% jump since late 2022. In Miami-Dade and Broward, premiums topping $10,000 are common. Nearly 80% of all insurance lawsuits in the U.S. are filed in Florida, draining billions from insurers through legal fees rather than repairs. Private insurers have pulled out, leaving Citizens Property Insurance Corporation, the state-backed insurer of last resort, with more than 1.4 million policies, triple its size just 5 years ago. Citizens now covers nearly 1 in 8 homes in Florida. This creates systemic risk. If a major hurricane empties Citizens' reserves, the law requires a surcharge, sometimes called the hurricane tax, that could add up to 45% to every property insurance bill in the state, regardless of location. Governor DeSantis has called the situation a ticking time bomb. But attempts to shrink Citizens' footprint have struggled because private carriers simply won't take on the risk. Hurricane Erin. In August 2025, Hurricane Erin formed in the Atlantic with projections to make landfall in South Florida as a Category 4 storm. Even before landfall, the financial ripple effects were severe. Insurers immediately froze new policies. Mortgage desks across Miami, Fort Lauderdale, and Palm Beach ground to a halt. No insurance meant no loans, and no loans meant no closings. Deals collapsed overnight. Families ready to move were told their transactions were canceled, and moving vans sat idle. This transaction freeze rippled outward. Banks in Atlanta, Charlotte, and Charleston tightened lending in coastal areas. In Jacksonville, insurers suspended coverage within 5 miles of rivers. Inventory in South Florida surged to levels not seen in a decade, as sellers realized buyers could no longer easily finance purchases. For the first time, Florida's local insurance crisis began to spill into national housing markets. Fragile foundations. The convergence of migration, surging prices, and an unraveling insurance system has left Florida in a precarious position. On one hand, demand remains strong. International buyers still see South Florida as a safe haven for capital, while domestic migrants continue to flow in from higher-cost states. On the other, the financial backbone that makes housing transactions possible, insurance, has grown unstable. Without affordable coverage, even cash-rich buyers hesitate. Meanwhile, ordinary families face an impossible equation. Stagnant incomes, 6-figure home prices, and insurance bills that can swallow half a monthly mortgage payment. Sellers offer credits or prepay insurance just to keep deals alive. Citizens Insurance remains the last line of defense, but it is overextended. One major landfall could trigger billions in surcharges on every homeowner statewide. Litigation adds another hidden tax, consuming billions that never rebuild a single wall. Florida's boom was built on sunshine, migration, and optimism. But as Hurricane Erin barrels toward its coast, the state faces a stress test that will determine whether its growth is sustainable, or whether the foundations of paradise are more fragile than its leaders admit. Conclusion. Florida's story is one of contrasts, record-breaking migration, prosperity, and growth alongside the rising costs of climate risk, litigation, and market instability. From Hurricane Andrew to Hurricane Erin, each disaster has left scars not just on land but on policy, insurance, and the very idea of security. The housing frenzy may have enriched many, but it has also priced out locals, destabilized insurers, and left the state one storm away from financial upheaval. The question now is not whether Florida can attract newcomers. It clearly can. The real question is whether it can build a system resilient enough to withstand the storms ahead.